I am George Ratiu, Manager of Economic Research with Realtor.com. We are in February, and large sections of the country are covered under a blanket of snow. Moreover, Pennsylvania's famous Punxsutawney Phil saw his shadow this week, hinting at 6 more weeks of winter. While the economy continues to hum along, real estate markets are feeling the season's chilly effect. New economic data this week offered mixed signals, with some highlighting continued momentum while others drove concerns over a looming recession. The ISM Manufacturing Index contracted for the 3rd month in a row, reaching a low not seen since May 2020. Meanwhile, a separate report from the Commerce Department showed that factory orders rose in December on the strength of durable goods, especially commercial aircraft. However, excluding transportation goods, factory orders slid. Counterbalancing these figures were labor market indicators, with the employment market starting 2023 on a strong note. Companies added over 500,000 new jobs in January, outpacing market expectations by a wide margin, and the headline unemployment rate slid lower. Moreover, the number of open jobs rose at the end of last year to 11 million, with hotels, restaurants, retailers, and transportation companies looking for workers. The number of employees leaving for better opportunities exceeded 4 million for the 19th month in a row. Meanwhile, initial jobless claims fell again last week to a 9-month low. Amid a labor shortage, even with well-publicized tech layoffs, companies are keeping workers on payrolls. Continuing claims also retreated. In light of the economic resilience, the Federal Reserve decided to increase its policy rate again, but this time by a smaller step. On the downside, the hikes will translate in higher rates for credit cards, automobile loans, and adjustable rate mortgages. On the upside, main price measures have notched visible slowdowns over the past 6 months. Within this context, consumer confidence moderated at the start of 2023 on worries about elevated inflation and a possible recession. On the housing front, this week we released our joint report with the Wall Street Journal focused on emerging housing markets. The big takeaway? Americans are seeking affordability, quality of life, and strong local economies in mid-sized cities. The trends were mirrored in our cross-market demand report, which showed that a majority of shoppers on our site are looking at homes outside of their current location, seeking lower-cost housing in metros with low unemployment rates. Also this week, Realtor.com's January housing report showed a noticeable increase in the number of homes for sale, even with fewer sellers in the market. Meanwhile, with homes lingering longer on listing platforms, median prices are rising at a slower yearly pace and are down 11% from last summer's peak. Stay well this week. We'll keep you up to date at our website and Twitter feed. Until next week's video.